Here is a beginner-level Operations Manager quiz that covers quality assurance and control, supply chain and logistics management, and cost control and budgeting. Let's go! Question 1. The primary goal of quality assurance (QA) in operations management is to A. Identify defects after production, B. Prevent defects and ensure consistent quality, C. Reduce employee workload, and D. Increase production speed without quality checks. The answer is prevent defects and ensure consistent quality. Question 2. Which of the following is a key component of quality control (QC)? A. Process standardization, B. Employee training, C. Statistical inspections and testing, and D. Reducing operational costs. The answer is statistical inspections and testing. Question 3. Which methodology is commonly used to improve quality by eliminating defects? A. Six Sigma, B. Just-in-time, JIT, C. Cost-benefit analysis, and D. Vendor management. The answer is Six Sigma. Question 4. What is the main purpose of a supply chain management (SCM) system? A. To monitor financial transactions, B. To improve product marketing strategies, C. To manage the flow of goods, information, and resources efficiently, and D. To reduce workforce requirements. The answer is to manage the flow of goods, information, and resources efficiently. Question 5. Which of the following is an example of logistics management? A. Hiring and training employees, B. Planning and managing transportation and warehousing, C. Setting sales targets for the company, and D. Designing new marketing campaigns. The answer is planning and managing transportation and warehousing. Question 6. The strategy of producing goods only when they are needed, reducing inventory costs, is called A. Vendor consolidation, B. Bulk production, C. Forecast planning, and D. Just-in-time, JIT. The answer is just-in-time, JIT. Question 7. Which key performance indicator, KPI, is used to measure supply chain efficiency? A. Supplier on-time delivery rate, B. Customer retention rate, C. Employee turnover ratio, and D. Gross profit margin. The answer is supplier on-time delivery rate. Question 8. Which of the following is a method to control costs in operations management? A. Eliminating financial audits, B. Increasing wages of all employees, C. Reducing waste and improving efficiency, and D. Expanding the supply chain without planning. The answer is reducing waste and improving efficiency. Question 9. What is the term for the difference between budgeted and actual costs in a project? A. Cost variance, B. Market share, C. Operational efficiency ratio, and D. Sales forecasting. The answer is cost variance. Question 10. Which of the following is an example of fixed costs in a company's budget? A. Employee wages, B. Cost of raw materials, C. Factory rental expenses, and D. Advertising expenses. The answer is factory rental expenses. Congratulations on completing 10 questions. Let's move ahead. Question 11. Which metric is used to measure the efficiency of a budget in controlling operational costs? A. Cost Performance Index, CPI, B. Customer Satisfaction Score, C. Employee Engagement Rate, and D. Production Cycle Time. The answer is Cost Performance Index, CPI. Question 12. Which of the following is not a function of quality assurance, QA? A. Process improvement, B. Ensuring compliance with industry standards, C. Correcting defective products after production, and D. Preventing defects in the manufacturing process. The answer is correcting defective products after production. Question 13. The process of verifying whether a product meets quality specifications is known as A. Risk management, B. Inspection and testing, C. Cost estimation, and D. Workforce planning. The answer is inspection and testing. Question 14. Which of the following is not a major component of supply chain management? A. Inventory management, B. Logistics coordination, C. Budget planning, and D. Sales forecasting. The answer is sales forecasting. Question 15. Which of the following helps reduce logistics costs and improve delivery speed? A. Increasing warehouse stock without demand analysis. B. Optimizing delivery routes and transportation networks. C. Reducing the use of technology in supply chain management. And D. Hiring more logistics personnel than required. The answer is optimizing delivery routes and transportation networks. Question 16. What is the key purpose of cost control in operations management? A. To ensure that expenses do not exceed the allocated budget. B. To increase operational expenses. C. To reduce employee salaries. And D. To eliminate financial reporting. The answer is to ensure that expenses do not exceed the allocated budget. Question 17. Which method is used to forecast and control future costs in a business? A. Customer retention score, B. Quality control checklist, C. Daily sales report, and D. Break-even analysis. The answer is break-even analysis. Question 18. Which of the following reduces the likelihood of stock shortages in the supply chain? A. Demand forecasting, B. Reducing warehouse space, C. Increasing production costs, and D. Delaying supplier payments. The answer is demand forecasting. Question 19. A metric that measures the percentage of products meeting quality standards without defects is called A. Cost Performance Index, B. Lead Time, C. First Pass Yield, FPY, and D. Employee Turnover Rate. The answer is first pass yield FPY. Question 20. What is the best way to ensure that supply chain costs are under control? A. Ignoring supplier price fluctuations. B. Implementing cost tracking software. C. Increasing inventory without demand analysis. And D. Reducing production quality. The answer is implementing cost tracking software. How many did you get right? Comment below and subscribe for more.